And here we are, we go in live. Good morning, everyone. And
Good morning.
hello, good morning, James. Today, we've got an amazing episode where we're talking about stacking a deal. So, whether you are a seasoned investor or you just started your property investment journey, join us today as we are going to talk about the deal stacking and all of the common issues and problems that you're finding when you are deal stacking or analyzing your potential next property purchase. I'm
Awesome.
joined by James Wyatt. James, would you like to say good morning and introduce yourself?
Good morning, Greg. Good morning, audience. Good morning, everyone. Yes, what we're really going to do today is follow on from last week's show where Emmanuel was talking about, the three problems that most people have in property. They pay too much at the front, the refurbishment costs get out of control, and the GD fee is a little bit padded out at the end. So we're going to dive deeper into those three subjects today, and I'm really looking forward to it because, Greg, you've done a deal recently, and I'm looking forward to hearing about that as well. So that's what we're going to do. We're going to do today. We're going to dive into that first subject where, paying too much, what's a deal, struggling to find a deal. So I'm looking forward to it, Greg.
Absolutely, and me too. And if you have any questions, or this is something that you're currently dealing with, or, on your property journey or on your investment, just leave the comments below. Get to us, and we're more than happy to help. And the first subject is buying right, so avoiding overpayment. It is very, very often that we find that people are buying emotionally the first investment, and especially is happening often on auctions. You're there, and emotions are building up. You've got cash, and it's like so easy to
Yeah.
pay more than you should, or even more than you wanted, if you had already set, your maximum price that you are prepared to pay. But actually, let's start from the very beginning. How do we know whether we are overpaying or whether we are, whether we're buying a BMV, which is below market value? And this is how you should be buying the property. So, James, how do we know that we're getting a good deal in the first place?
Okay, so I'm going to use the analogy of a burger, a beef burger or a veggie burger, whatever you want to, whatever you're into. If you think about a burger, it's got three layers, and these are the three layers that we're talking about today. We're talking about the base being the overpayment or paying the right amount. The meat will be the refurbishment, and the bun on the top will be the selling price or the GDV. So you've got to look at it from a burger point of view. You don't want a really thin base. You don't want a fat base. It's all got to be in balance for it to work. So buying right, the first thing I think, Greg, we need to understand what someone's strategy is,
Yes.
because if you're going to auction, then you're going to be buying a property that suits your strategy. So, for example, if your strategy is HMO, then you're probably looking for a large Victorian house with reception rooms, with lounges, with a nice space out the back, in a good location, by a bus stop, by a train station, by a supermarket. So if you're looking for your HMO strategy, then those are the properties you need to be looking at. And equally,
It's about buying, James. Let's focus on buying rather than strategy, because we're going to get to the strategy on the second and third point, as in analyzing your GDV. So this is what makes a good deal good.
Okay, so we need to find motivated sellers for starters, don't we?
Okay,
So that the
what is a
very
motivated
first.
seller, James? Because what it is, we've got friends who are like BMV motivated seller and all of that OPM, and they say, what are they talking about? So motivated seller is the person who needs to sell quickly.
Yes.
Could be a
Yeah.
number of reasons. Could be a mortgage. Could be a marriage that has gone wrong now. And as you can imagine, if you've ever been in a relationship and it didn't go really well, imagine if you now have to live with that other person where you've already decided to separate your life. Or
Absolutely.
James, deceased estate. So this is when someone's passing away, and there are many, many of those circumstances around in your investment area, in your town, in where you are now. It's just knowing how to look for those. And James, what would you advise? How to find those BMV, below market value? So that's where the owner, the vendor in this case, needs to sell the property quickly. How do we find those?
Well, you're absolutely right, Greg. It's the three Ds, isn't it? It's debt, divorce, and I've forgotten the other one. What was the other one? Debt, divorce, and can't remember. But there are three Ds. So, in order to find motivated sellers, what we're looking for is we would know our market, Greg, wouldn't we? We would know the market that we're in. We'd understand like what the average price was for a property. So
Yes.
really, we're looking for property that just looks a little bit too cheap. Maybe there's something wrong with it. Maybe it's got a problem, or maybe someone just doesn't want the property. But the first place to start is get yourself into estate agents.
Hmm.
Tell them what you're looking for. Introduce yourself, build a relationship with an estate agent, and then I think you might have done this yourself, Greg. You ask for the smelly properties. The stuff that's not shifting. Maybe it's not. The photographs don't make it look so good. It is all about finding those properties that are just not shifting. But equally, when we're looking for motivated sellers, there's also going to be some properties that maybe not don't even get to an estate agent, Greg, because they've already been discounted so much that they've been given to an investor straight away. And that's something that we hear about, Greg, isn't it? We talk about the book that an estate agent has where property doesn't even come to market. Do you know what I'm saying?
Yeah, so allow me to tell you about my experience. This is when you are, so to buy the property right is, yes, essentially a good relationship with your local estate agent is almost everything you will ever need. And you don't need to get to know, and spend your time or invest your time in knowing all of the estate agents in your area. You only need about one or two good ones, good relationship, and they will bring you every opportunity they have. If they like and trust you and they know they can proceed on the purchase quickly, then you will never have a problem buying below market value properties, because they know that they want to sell and you want to buy. This is simple. So buying a BMV, so buying it right, yes, this is it. So buying from people who are motivated. But now,
Absolutely.
James, those mistakes that last week we talked about with Emmanuel, because Emmanuel it is an angel investor, and if you do not have your own money, you can use other people's money. And now, to be investable, what we talked about last week is to make sure that you've got the right deal, and that's exactly what we talk about today. So having that good deal below market value, what if you use an investor's money, what else do you need to consider to make sure that you're going to buy it right?
Okay, I think we need to touch on the vendor, the seller. We need to understand what they need from the sale. Let's not get focused on below market value, because a deal doesn't have to be below market value, Greg.
Yep.
If you're adding value in the other two areas, then it doesn't need to be such a low price to begin with. So let's not fall into the trap of thinking that everything has to be below market value. It doesn't. It needs to be a win for the vendor, the seller. Like we said, the three Ds: debt, divorce, and I'll get it in a minute.
You get it.
So it's understanding what they need. So what does the vendor need? If they need speed and certainty, then that's generally going to be other people's money, a cash injection. Because normal conveyancing can take quite a long time. Getting mortgages, getting bridging can take a long time. So
Yeah.
moving quickly can be a reason for a good deal. They might want some cash quickly. So in really below market value, yes, that's a nice, sexy acronym to use, but really it's about what the vendor needs, and their how they need to get rid of the property.
And buying it right is, avoiding overpayment. So yeah, when do we know that we are overpaying for the property? So how do we analyze that? So if we just run through a simple scenario when you and me, James, we are analyzing our next investment, is you're looking at so the property, yes, but there's a few things that you need to consider. So it's the area where the property is, because that's very important. It needs to be an area of a high rental demand. So
Yeah.
James touched on strategies. So well, let's assume for this episode that we are buying properties to hold and rent. So if we assume that this could be, it could be a service accommodation, it could be HMOs, it could be a single let, it could be any one of those where you're holding the property after, after you purchase, you add the value and you refinance, because there's a lots of different scenarios for investments. We're only going to focus on that one today. And so if you buy that property to hold, and the area is very important, it needs to be high demand, and also you don't need to understand what are the property value local in the local area. So if you go on the right move, you can do your quick simple search and find out what other similar properties like this, like the one you're wanting to buy, cost at. And you just go in, check the pictures, see if they are, just standard, normal, vanilla, in vanilla properties, such as just magnolia walls, nothing fancy, because
Mhm.
that's giving you more of a like a feel for the area, and whether this is 200 or 300 or 400,000 pounds, where if you do an area for about a mile from the postcode you're looking at, then you get a feel for what's the area value of the properties. But usually not only just properties that are on sale, because the prices on sale is what estate agents always bump up the prices. So it's what they sold recently. So if you go to the sold history within that area and get a feel for what the property used to sell for, this is giving you obviously a feel for what's the asking price, what's the sold price in your area, get the average, and then you know exactly whether the property that you're buying, you're getting a deal below market value or just good deal, or maybe they're asking too much. But James said something very important there. Sometimes it's not only stick to BMV, is when you add the value to the property, you ultimately buying the property for below the market value, because you got a plan and you want to add an extension, a loft conversion, or you're going to add the value through a legal paperwork. So there's so many different aspects of that. James, anything
Absolutely.
to add?
I was going to say that you're absolutely right. The estate agent is the first point of call. That's the relationship you need to build up quickly. But there's plenty of software out there. There's lots and lots of online software that you can get that will tell you the comparable. So if you think about the price of a property, Greg, exactly right. What is the value of a property? The value of the property is what someone's prepared to pay for it,
Yep.
or what a RIC surveyor. So that will be, when you come around to get some finance on the property, the
Hmm.
lender will be looking for the property as security against the loan. So
Yes.
they'll have a surveyor, a RICS valuer that will look at the comparables of the market. They'll have a lot more information at hand. They will value the property based on it being the asset to the loan. So you could pay for a RICS valuation, Greg.
Hmm.
That's it's a couple of £100. You can get someone to come and do a proper valuation on the property. That will give you peace of mind. What's sold in the area? That's an indication of the value, because the actual market itself is up and down. We're obviously in a slightly falling market at the minute. So that affects the value of the property. The economy affects the value of the property. But let's talk about location. You're absolutely right. Location is really important, because if I'm buying a property in the middle of nowhere, a rural location, then I'm not
Hmm.
going to have very many comparables. They're probably going to be more self-build properties. So not, in other words, someone's built them off plan, so they don't follow a particular design that everybody else has got. So they're very difficult to value. But if we go in town, if we go to some Victorian, row of terraced houses, and we're in a dense area where there's lots of buying and selling going on, then we can get a real feel for the value of that property, can't we?
Absolutely, 100%, absolutely. So this, James, you're right, but so this is where you are knowing your area. So
Yes.
decide on your investment area, which is really good. And yes, James inclined on softwares. Next week, the next episode, we will be taking you through a different property tools that you can use to analyze the deals very, very quickly. And there is a huge number of the different different softwares out there who can deal and help you find a deal really, really easily if you're not good at it. But that's for next week, so come and join us next week. But buying a property is one thing when you need to understand your area, where you're buying, whether you're buying a bit below the market value or whether you're adding a value through refurbishment. So for the strategy that we're discussing today is to buy, refurb, refinance, and hold. So you're renting, whether you're converting to SA, service accommodation, or HMO, home of multiple occupancy, or just a single let for families. You are essentially going through a refurbishment process, and this is another very common mistake that we see we see our friends that we've also I've overpaid on one of my refurbishment because I went into the just to common emotional decisions, which I'm going to just share with you right now. So the property that we bought recently, we have converted this bungalow into a 6-bedroom HMO, and we did it to the really high end. So we went with with bells and whistles on this property. It has created a beautiful, beautiful final result. But emotionally, I wanted to to deliver a high level product, and that's exactly what we did. But the area where this is located is just a little bit outside of the catchment for my ideal tenant. And although I was very fixated on the property, which is beautiful, by the way, I'm going to share some pictures of this property. But actually, it may be for the location where it is, it's been done a little bit too high. But still, everyone who's coming, they love the property, and we are just about to fully tenant the property this month. So really looking forward to it. But James, common mistake for refurbishment, other than just emotional design, I'd say.
Absolutely. I mean, look, let's remember the burger. Remember the three stages here.
Yeah,
So if we're borrowing, if we don't buy right, then we're borrowing from the other two pieces, aren't we? Because at the end of the
yeah,
day, it's still got a stack. So if you talk about refurbishment, well, that's a minefield of unless you've got X-ray vision, how can you know whether you've got rotten joists or perhaps bad wiring or bad plumbing or a bodged DIY or a leaking roof? Unless you really do pay out for a structural survey, you're not really going to know. And I'll give you an example of this. I bought a block of Victorian an office block of Victorian property,
hmm,
and it all looked great to me. But there was a bit of a musky smell in the basement, and I just thought, well, that's what basements have. They always have this sort of musky smell. But actually,
yeah.
and it wasn't a basement where there was no windows. There were windows, Greg. But actually, when we started to take some stuff away, we started to take some of the ceiling away. We saw a lot of rotten joists, and what we actually saw, Greg, was something quite disturbing. It was almost like there was very little left supporting an extension that had been put on the back. So it was like, wow, this could have been, really, really dangerous. So we had to put some steelworks in, Greg. So
Hmm.
obviously we need a structural engineer for that. We need a professional to tell us where to support the walls and the brickwork. So you wouldn't have known that unless you'd have started pulling some stuff apart. So absolutely right.
But James,
Rotten joists
there's
and metals.
you're absolutely right. There's so many costs. So let's just talk about the costs when you buy and purchase, when you purchase the property, also when you hold the property, and also some hidden costs. So firstly, when you purchase the property, you've got plenty of costs. And these are, well, your time is the first one, which is
Yeah,
mostly, undervalued by a lot of people when they spend a lot of time over analyzing the deal and
yeah.
talking themselves out of it. That's one thing that we always see. So we also helping other people with their deal investments, and we see how many of them are over analyzing, spending lots of time on the property they're never even offered on. So this is one, your time. Second one is deposit, usually 25%. The next one, stamp duty. So as an investment property in England, you'll pay about 3% above the base rate, and this is depending on your circumstances, whether you are a first-time buyer or an investor on your next property. But usually it's about 3% above the base rate. Next is valuation costs. James already mentioned about those valuation costs, which they just add up to your purchasing price, and you need to factor that in because obviously your ROI, your return on investment, it relies upon it. Next is mortgage broker fees, also product fees as well for your mortgage, which again just adds up on top of it. Solicitor fees, searches, or your legal, your investor interest rate. So if you're working with investor, you need to factor all of that interest into the costs of purchasing the property. And surveying, any structure surveys, any home buying surveys, just as James mentioned on the property he was buying, you've got to factor those in. So this is your costs to purchase the property. James, what are the holding costs? Because Emmanuel last week mentioned that one of the common mistakes of novice investors is not mentioning and not actually analyzing the holding costs. What are
Yeah.
the holding costs, James?
Well, your holding costs, when we do projects, we assume that when we get to the end, there'll be a tenant waiting to move in, or there'll be some serviced accommodation clients waiting to move in, or some office tenants, or whatever it is that you're creating, your tenant. They're not going to be there ready to tap you on the shoulder and say, "Can I have the keys?" the moment you finish. So there's going to be a period of time, Greg, between finishing the project
Yes.
and a tenant moving in. Okay.
Yes.
And there's also going to be some costs for advertising your property, for getting an estate agent to advertise it. And then of course there's going to be the commission that you're going to have to pay for that process as well. So holding costs are, you finish the project, and between the finishing and the tenant moving in, that's a period of holding the property, and there are costs associated with that. Council tax needs to be paid. Standing order needs to be paid on all of your utilities.
Yes.
So it's really important, Greg, that we're marketing the property long before we finish the property. Yeah.
Absolutely.
And we can use, I think you've done it. You can use some CGIs, so some computer generated imagery to get some interest in the property. So that's holding costs when the project is done, and in between that and when the tenant moves in.
And also, James, thank you so much. You're absolutely right. I'm not sure if you mentioned about lease. So you have to pay the lease. All of those hidden costs, they do add up. But actually, there are also the third part of costs, which are hidden costs. And they are hidden for purpose, because when you're buying a property, you might not think about them initially, but they are quickly adding up, and they might really, really ruin your ROI, your investment, your return on your investment. And these are electrical safety. When you're buying a property, we would advise that you're going to go and instruct your local electrical company to do the safety audit on the installation, because it may have a beautiful, nice switches and sockets, but you don't see the wiring in the walls, and that bill to replace the old wiring, rewire the whole place, depending on its size, it could be over 5, 6, even up to £10,000, depending on the property that you are buying. The bigger the property, the higher the bill. Also, post refurb cleaning. So we did our project, and we didn't realize how dusty the property would be afterwards. And we thought, like, oh, the builders will keep it clean, and in fact, they did. We had a really good builder on site, but still, the number of times we had to arrange for our cleaners to come back in and clean the property after the refurb, after the decorating, after the furnishing. So all that time and cost just added to the bill. So be wary of the hidden cleaning costs post refurb before the property is ready for tenants to go in the market. Also, cost of recycling. So skips. And this is another very, very common mistakes not to add the cost of skips into your quotation. When you're working with reputable building company, just double check because they might already be quoting for about 4, 5, 6 skips. But on a larger refurbishment where there's lots of demolition going on, that number of skips can be, can bump up very quickly, and that the cost per skip is about £300 to £500, depending on the size of it. So keep these in mind, and always put this into your analysis because that's
Ja-
the
uh,
hidden cost.
Greg, I'm gonna tell you a story actually. So we bought a commercial shop in my local town, and it was a kitchen showroom actually, and we pulled out unexpectedly 50 tons of tiles. So we've gone beyond skips now. We were having these grab trucks come in, and yeah, I mean, I think there was 10 trips of a grab truck, which
Wow,
added up to over £5,000. So
wow, wow.
that hidden cost. You're absolutely right. You cannot stress how expensive it is to get rid of rubbish and waste and recycling. So yeah, make sure that your contractors have budgeted that in, or if you're not using contractors, you're doing it yourself. Yeah, you really need to factor that in. That's a really good tip, actually, Greg.
Indeed, and obviously this is now. So we are getting to the stage where the property is being, it is yours because you've purchased the property. You're using other investors' money, your own cash, or using short-term finance, such as bridge finance. Be careful about the bridge financing and also the interest rates, monthly interest rates, as well as any fees on your refinancing when you're going on to a long-term product, which is the actual mortgage after the refinancing. But also, if you're using that strategy, so which is buy, refurb, refinance, and rent, BRRRR, then you also have to take into consideration the cost of refinancing. So post refurb valuation. So there's also almost like once again you will need to instruct your solicitors. You need to instruct your surveyors to find out the GDV, the gross development value for the property, because it is very important because that's how bank understand what value you've created to the property, and now this will influence your ROI in the greater details, because the more value you've created, the more value evidence and through the valuation come through, the better ROI on your property, the more money you can recycle and do a next project.
Yeah, yeah. I mean, we can't give you financial advice. We're not FCA approved or anything like that. But
Thank you. That's very important.
it is important. But how much value are you adding to a deal? It's exactly what Emmanuel said. It's always going to be, less than you think. And I would say a real good tip here, Greg, is take lots of photographs, because at
Yes.
the end of the day, you're going to be trying to convince someone that doesn't know you, doesn't know the area particularly well, doesn't know the project, doesn't understand about the strategy you're trying to do. They are literally valuing the property as bricks and mortar. That's it for the lender. So we need to have a story. I take lots of photographs, I put them into a folder, and we talk about what we've done so that you can show the valuer exactly the work you've done and how much you've spent. And then on the back of that, you could have a couple of comparable photographs, some local stuff that's sold in your area. So it's just a way of helping that process and getting that value up. Is that something that you did with your bungalow, Greg?
Well, actually, James, you're totally right. So on this occasion, we wanted to see how much in value we're going to get for a brick, for a bricks and mortar, just a standard residential valuation. We had a guy come in, absolutely great, really loved what we did to the property, and he came out with the nil valuation, and I'm like, what? That's surely
What?
not right. But I anticipated, because this was based on a residential property, and we've heavily changed the internal walls and everything. So this property could never be back to a residential home, because it's six
Oh,
bedrooms, six en suites. So it's never a single family home. So we went for a commercial valuation, which essentially this is what you should do. Uh, there is also a rule of thumb. If it's up to 6 bedroom HMO, which is classified as C4 class use class, then commercial valuation could be good. It will cost you a bit more to than normal residential valuation, and usually commercial valuations are recommended for sui generis. This is 7 bedrooms or more than 6 people occupying the property, and that's where you would like to use a commercial valuation in most cases. But because what we did to the property, we've done it to a really high level, and we converted this to almost like a boutique style HMO, co-living HMO. Then we knew that the brick and mortar valuation is never going to be there where we are needed to be. So we use a commercial valuation, and it's coming up at exactly what we have anticipated, actually even a little bit more, because although the location of the property where it is not the highest of the demand, but what we've created as a final product, it attracts so much attention that people absolutely love it, and we are secure in places, and they're flying. So we are very, very happy. So commercial valuation and cost of it, take it into consideration.
I mean, that particular deal, Greg, is probably one of the best I've ever seen. So I'm going to pat you on the back here and say that is an absolutely amazing. Usually, Greg's right. So lenders will default to an AST, an assured short hold tenancy, so a family moving in, if you like, because that's like,
Yeah.
if Greg was to fall behind on his payments, then the lender needs to look at the default. How can they get their money? So the commercial valuation, for you to get the right commercial valuation, I mean, you've got to bear in mind, Greg, you've done a lot of work to the bungalow. You bought at the right price.
Yes.
The area where you are, Bristol, is probably the best in the UK for this kind of thing.
Well, it's been voted one of the best cities, in England to live in. Was that last year? So yeah, there must be a reason for it.
So your room rates are like unbelievable. I mean, they're really, really high. And of course, if the tenants are prepared to pay, high room rates, then effectively you've got the cash to pay the loan. So therefore, the valuation can be where it needs to be.
Well, James, actually, we had a tenant moving in. He's moving in this weekend, and
you're not helping him.
Yeah. What it is he paid 6 months in advance because there was some legal stuff that we were waiting for, and he said, I don't want to wait for this. I'm happy to pay for. It was a minimum contract of 6 months. He paid a lot of money to secure this room because he was afraid that he's going to lose it. So it just tells us that when you do deliver a really good quality, the people will appreciate it and they will pay the money.
And drinks are on you then. You're absolutely loaded. Is that just the one? Have you got any other people waiting to move in, or what's the?
Yes,
what's it
yes.
like?
We're just going through the referencing. So we are using. We've got an in-house management system, and well, actually, this is it. We need to tell people about what we do and how we do things, how we find deals, what we use to manage the properties. And next week, we're going to talk exactly about that, because I believe that this is a great value that we can share with you, and we can contribute to your property investment success.
That's
Would
a good
you agree,
idea,
James?
actually. Yeah, we could actually talk about that strategy, couldn't we?
Yes, indeed. And also, final is the final value of your property. So this is the analyzing the market condition, for your accurate gross development value. James, what do you do to analyze the GDV for your investment project?
Okay, again, I'm talking to estate agents. I'm talking to people that are buying and selling property all day long. And obviously, there's software that we can use. I don't want to name any software names, but obviously, we've got one that we use that will calculate all of the GDV. But really, we're looking at what's sold in the area, what the market is. Is it a growing market? Is it a falling market? Estate agents the first point of call, but generally, you can do your own market research by going on to the popular sites and working out what the sold prices are. And the thing is, Greg, if we're talking about GDV is the gross domestic value. So that's the value of the site at the end.
Yes.
And it's really important if we're going to be doing refurbishment, because we are going to be adding value. We want to see that value. We want to see it realized in that GDV. And another point about GDV is that you can, if you start to build multiple dwellings, so let's say you find a site and you convert the uppers under permitted development, we can talk about that some other time, into flats, then obviously now we've got, if it's on top of a shop, now we've got a shop, so that has a value. Then we've got the uppers we might turned into 2 flats, that they have values. So the GDV then becomes really enhanced because we're adding all those three pots together. Instead of it being one title, one unit, now we've got 3 titles, 3 individual front doors, if you like. That really does add tremendous value to the GDV. So estate agents, comparables, but also adding front doors, if you like, to your site can have a big impact on GDV.
Absolutely. So yeah, comparables definitely and most important, because when you have your valuer, so friendly valuers. So when you're on your first investment journey and first deal that you make, you might not have those relationships, but there's a good advice that we're both advocates of is network, and network. Once again, there's a plan. It doesn't matter where you live. In England. Or maybe all over the world, there is always a networking event close by that you can attend with other people like-minded who are investing their money in properties or other businesses. But this is the right place for you to start. Comparables, finding a GDV. So when I had a valuer come into my property valuing, I did ask questions, and they said, we need to compare this property. We need to have some comparables within like a crazy short limit, short radius from my postcode. And I'm like, God, I know there isn't anything like what we've just created in immediate surroundings. And I'm like, okay, so at that point, I knew that we'll have to go for our commercial valuation, because I know there isn't anything comparable to what we've created. That's why we understood that what we're creating is not just a vanilla, a buy to let. It is a product, is a business, and that's exactly what it is. We high value, high quality commercial valuation.
And the
But
thing is, Greg, that commercial valuation, let's just touch on that. So you're going to pay a little bit more for that valuation. Am I
yes,
right?
yes.
And also the interest rate for a commercial loan, does that change? Is that different to a normal residential?
Well, that could be slightly higher because of the commercial mortgage that you're going into. And also, James, that's a very good question, actually, because currently what we noticed that a lot of and we are not FCA approved to give a financial advice, but what we have noticed on the deals that we do is what lenders do these days is they are offering lower rates in regions of 5.5, 5.6, but there is a fee, an arrangement fee, which is quite high. So it could be about 3 to 5%, and that could be also a deal breaker. So pay attention to your deals and the numbers, and if you have a really good mortgage broker, they will look after you. So again, I think we talked about the team so many times on this podcast. It is important to have trusted people in your circle. And James, where do we find those people?
We find them networking, Greg, by going out there, telling people what we do, going along to property shows. There's plenty of them around. But networking, we've got the PIN group, you've got Progressive, you've got lots and lots of groups out there that you can go along to. BNI, there's some early morning stuff that's really good. But, it's just about telling people what you do. Don't be frightened. Don't be shy. Really have a conversation with everybody that you come across, because they might have a deal. They might know someone that's selling property. I live in the north, so everybody's chat anyway. So you've only got to walk into a shop of strangers and you suddenly find a property deal. But yeah, it's telling everybody what you do. You build your network by being the you want to be the sort of person that you want to deal with yourself. So you need to be authentic, you need to be trustworthy, you need to be, deliver what you say you're going to do. It resonates from you. So your character needs to be authentic
Absolutely.
and honest.
Going back to analyzing your market for accurate GDV, comparables very important. Speaking to your friendly valuer, and you will find them on the networking events which are near where you live. They can give you an indicative value for your projects, what you're aiming to finish. And this is very important to understand your GDV before you even purchase your property. Because as a property investor, you understand that, okay, there is a property, and to understand whether this is a BMV or not, or maybe it is already below the market value, but adding the value you want to add to this particular property, when you understand what is the GDV of your project, you will ultimately know if this is an amazing deal or if this is just a good deal. And having people in your inner circle of power team, very important. So James, property investing, is it easy?
No, it's not, I'm afraid. It's quite a difficult thing to get into. You really do need to know your knowledge. You definitely need to be around the right people and the mindset, Greg. So that's an enormous question. Is property investing easy?
And let me ask the same question again. If you have the right people around you and you're no expert in investing, but you can apply Henry Ford, approach, which is, I don't need to know everything. I need to know people who know everything.
Yeah, that's it.
If you
Okay.
have the right people in your inner circle, would the property investing be easier?
Okay, so if you asked an individual person and a property investor, is it hard? They'd say yes. But if you were to ask a boardroom, imagine a boardroom of people, and each person in that boardroom had a specific skill. Someone was good with numbers, somebody was good at project management, somebody was good at the legal, somebody was good at the talking to vendors and agents. If you had a boardroom of people, your network, then property investing can be actually fun, Greg.
James, I have to share this with you. We have some live comments as we go, and Renuka just said 100%. She agrees with us about about that having power team, and also Jeanette. Good morning to everyone. Actually, good morning to all of you. Rowena, good morning to you as well. And the quality. This comment, let me share it with everyone. Quality always wins and attracts the best clients. And yes,
Very true.
when it is important, when you do invest in properties, just always make sure that you're going to deliver on quality. Don't think that buy to let, it has to be the cheap carpets, cheap beds, or even second hand. No. You're creating home for other people, so always make sure that you deliver on the best quality that you can. So the people, you will attract the right type of people. They will enjoy your property. They would love to stay there, and it's just a retention on your investment. You will have a happy tenants living in your property. Most likely, you will be able to attract higher rents because of the quality you've created. So quality is very, very important.
Yeah, it's very good.
Thank you,
Always
Jeanette.
try and raise your standards. That's what we're saying. Always raise your standards in everything that you do. But if you are going to be a property investor and you've picked a strategy, then why not be the best there is? Why don't
Yeah.
you go for world class? Because Greg's absolutely right. You attract all the good energy associated with that. But yeah, I mean, you're absolutely right, Greg. Sometimes we forget the importance of an interior designer, someone that can bring that skill to the table, that can really add value to your GDV and also impress the valuer when they come around as well.
Yes,
So good
and
point.
we also have some questions from a chat. Is if we could talk about the rent to R2SA or R2 HMO. So it's rent to service accommodation and rent to HMO. Well, yes, we can. We don't have enough time today to cover those, but actually, me and James will be scheduling a webinar when we would like to cover most of the strategies, there's so many investment strategies that you can apply in England, and we would like to cover majority of them. And if you're interested, leave the comments below the video, and we will come back to you with the dates and how you can join us on this free webinar for your investment journey, how to start, and everything you may need to help you just crack on that next best deal. So stay tuned, leave us a comment for more information, ask for more info, and we'll do just that. James, what else is there important on your property investment journey?
Well, we talked about most of the things, but the important thing is to stay positive and to stay focused on what you're trying to achieve. So it's really important that we have goals and we read those goals. And I mean, we talk about it all the time, Greg. It's about, don't judge yourself on where you're not. Judge yourself on where you've got to. So pat yourself on the back for getting one property deal, two property deals, whatever it is that you've got. You've done a great job, and pat yourself on the back. So don't fall into the habit of thinking that you're not where you need to be. So that would be a great tip.
Great. Ladies and gentlemen, to summarize today, amazing podcast is, buying a property. Location is very important. People you work with is very important. Your local estate agents, your power team, networking on your on your local network, investors network, like a pin. If you tap into property investors network run by Simon Zucci, or he's just an amazing guy. Actually, on that note, I really need to let James go because he's doing something absolutely amazing. There must be like hundreds of people in the online, and I'm not sure how much I am allowed to say, but James is helping lots of people over this weekend. And there is a live, as much as we are live now, there is another live event that James is part of. So, James, I'm so glad that you could come and join me today, and you've obviously take time. And now I will let you go and inspire and help hundreds of other people invest on their journey.
Yes, absolutely. And a quick plug. So obviously I'm a pin host for Simon Zucci, Great North Pin. It's next Tuesday at the George Washington. You're absolutely right. I'm part of the Lease Options Live virtual event this weekend. And I'm in charge of about 30 people. So I will have to shoot off and say good morning to everybody. Thank you so much, Greg. It's been a great show. And thank you to all the comments as well. Thank you to Rowena. Debt. That was the last D. Thank you so much. Awesome.
Yes.
It's been
Thank
great.
you.
Thank
Guys,
you.
we love you. Thank you so much. Thank you for tuning on Sunday morning with us, and you've chosen to spend, that's an hour of your time. Thank you, and we wish you have a great weekend. See you next week when we will talk about the business and how you can analyze these deals automatically. And actually, really, all you have to do is just say yes. That's all.
Yeah.
So we will make this nice and easy for you. Thank you so much. Have a great weekend. See you soon. Bye-bye.
Take care. Bye.